Morning. Sorry about that. I'm not as technologically adept as one would hope.
All good. And we got the whole gang here for you. So thank you for coming.
A pleasure.
So Rick, I wanna talk about a number of things, and I kind of advertise this as an opportunity for the listeners to ask you about their favorite stocks or stocks that they're kind of interested in. But before we get to that part where we get the Q&A from the audience, I wanna do a few starter questions. So the first one is, do you ever get tired of doing all these interviews?
Yes, it is a means to an end. And when I say get tired, I get pleasure from it too. Um, I found beginning in 2011 with Sprott that social media was a way to engage an audience without the filter of the popular press, which was the information distribution mechanism that I formerly used. And so, I mean, the answer to it is yes, I get tired of it. And B, I get energy from it too, if that helps.
No, it absolutely does. It absolutely does. And like every time that I do a video or a webinar or do an interview, I have to kind of step up my game a little bit, get more alert and sharpen. And even blogging, like putting our thoughts down on paper, that requires us to, sharpen the way that we're, thinking about something and gathering more data and information, trying to put it together in a coherent and um, logical way so people can understand. So that absolutely makes sense. So I want to start with gold, which we discussed last time, and Goldman Sachs put out a report about a week ago talking about inflation, talking about the election, in the US, the fiscal challenges of the US, the monetary policy challenges that could come under a Trump presidency. Right now, Trump is actually favored, according to gamblers, to be the next president. It's not a big margin, but he's favored right now. And there is a possibility of a Republican sweep in 4.5 months. Goldman says that in the event of a Republican sweep, the chances of having much higher inflation go up quite a bit because the Republicans would probably implement tariffs. Trump would want to put in tariffs, less immigration, obviously, tighter sanctions on Iran, so maybe raising the price of oil. And then Trump wants to do all these tax cuts, which seems completely mind boggling when you look at our debt and our annual deficits the last 5 years. But he wants to do that. So this could be very bullish for gold potentially, and Goldman kind of alludes to that. Does it matter who the next president is for gold, Rick?
No, not a bit. What matters isn't narrative. Goldman Sachs can get attention, which Microsoft could do too by talking about Trump or Biden or Kennedy. Behind the narrative, let's look at the arithmetic. This is important. The on balance sheet liabilities at the federal level for the US government are $34 trillion. The operating deficit on balance sheet is in excess of $2 trillion, which means that we're in a $34 trillion hole or net $29 trillion hole. And rather than getting out of it, we're digging it deeper by $2 trillion a year. Beyond that, the off balance sheet liabilities at the federal level, not state and local, not corporate, not individual, the net present value of unfunded liabilities, Medicare, Medicaid, Social Security, federal pensions, military pensions, exceeds $100 trillion. This number, which is to say the net present value of entitlements, increases every year by more than the operating deficit, which is to say the net present value of unfunded liabilities increases between $4 and $5 trillion a year, while the operating deficit is $2 trillion a year. So we're $120 trillion upside down, and that number is increasing at $6 trillion a year compounded. You get out of that dilemma by cutting benefits and cutting spending, which is politically unpalatable to both parties, and it's politically unpalatable to voters who are challenged arithmetically. The only way that you get out of this dilemma is the way that we tried to get out of it in the decade of the 70s, which is to say that you debase the currency, you reduce the real net present value of the obligation. In the decade of the 1970s, as a consequence of the debt hangovers that we experienced then relative to revenues, we devalued the dollar, the purchasing power of the dollar over that decade by 80%. We were very lucky in the decade of the 70s because the baby boomers were coming of age. And so we were able to grow our way partially out of our dilemma. We squandered that, of course, because we took our collective obligations on balance sheet from about 15%, 15 to 20% of GDP, that was the estimate, to what is currently 110% of GDP. So our ability to grow ourselves out of this problem uh, would seem to me to be both arithmetically and demographically challenged. And that circumstance will occur irrespective of Tweedledum, Tweedledummer, or Tweedledummest being elected president, which is to say, Biden doesn't matter, Trump doesn't matter, and Kennedy doesn't matter. This is arithmetic. If you listen to Mr. Trump, the candidate, he's extraordinarily transactional. So he's trying to buy the votes of old people like myself by saying, I will maintain and increase your entitlements, your Medicare, your Medicaid, your Social Security. To which I might ask, using what for money, sir?
Yeah, he's very transactional. He's a promoter, Rick, through
As
and
is
through.
Biden, as is
Yeah.
Biden, as is Kennedy. This will
Hmm.
make me unpopular with a lot of your listeners, but the truth is that you can tell that one of them is lying when their lips are moving.
Yeah, that's true. Can you remind us, just 2 minutes, please? Can you please, remind us why investors should have gold in their portfolio?
I believe that gold has functioned for 1,000 years as insurance against the depreciation in purchasing power of fiat denominated savings instruments. Why should people be afraid? Well, let's do the arithmetic again. Right now, the interest on the 10-year US Treasury, the benchmark savings instrument, is 4.3%. If you balance that 4.3% against the CPI, the standard measurement of inflation, which is currently 2.6 or 2.7%, you feel pretty good. You're coming out of this with, 170 basis points in real yield. The problem with that is that I think that the CPI would be better designated the CPI. When I look at the basket of goods and services that I consume, what I see around me is the deterioration of the purchasing power of my savings and my income is declining by more like 7.5 or 8% compounded. First of all, the CPI is hedonistically adjusted, which means that they take the rent that you pay and they adjust it by what they think the value of the accommodation that you enjoy is, which is to say it's artificial. Secondly, when it's inconvenient for them, they don't include food or fuel. The problem with that is that I travel and I eat. But the biggest problem with the CPI is that it doesn't include indirect or direct tax. Tax being the largest component of the cost of living for almost every working American family. For some people, larger than food, shelter, energy, and travel combined. So if you then look at the basket of goods and services that you as an individual consume, and you consider the fact that the real deterioration in the purchasing power of your savings is more like 7.5 or 8% than 2.6%, and you juxtapose that 7.5% outflow against the interest rate on the U.S. 10-year Treasury, which is to say 4.3, what you learn is that by saving in fiat-denominated savings products, you are reducing your purchasing power by about 3% a year. Now, if you do that for 10 years, you come to understand Jim Grant's description of the U.S. 10-year as return-free risk. That's why you own gold. You own gold because it has performed well during periods of time when there have been concerns about the efficacy of investing in conventional fiat-denominated savings products. And right now, the arithmetic makes anybody who can add and subtract nervous.
Yes. Yeah. Well said. Having cash in a typical savings account or CD is a great way to ensure you're going to lose your purchasing power slowly over time. Um, so I want to transition a little bit. I listened to one of your recent conversations last night, and I found it very insightful. And one of your quotes that I used on the lead to a tweet about this space was, you basically buy during panics. You do most of your accumulation of stocks during panics. And there is a little bit of a panic this week in the junior mining sector. There was a very unfortunate event that happened in the Yukon, and a company has lost over 400 million of market cap in a couple of days. And there's some knock-on effects in other companies like Banyan Gold, Snowline Gold, et cetera, et cetera. Is this a panic? Is this an event that would cause you to be like, let me take a look at those stocks? Is this warranted?
I wouldn't describe this as a panic affecting the whole junior market. I think it is having an interesting impact in the Yukon. And given that I don't have a full position yet in Snowline, I certainly hope it continues. I'd like to buy a lot of Snowline. And there would be nothing that would make me happier than seeing it decline in price by 50%. I think that this event at Victoria will impact the willingness of the political establishment and the voters in the Yukon to permit, and I think they'll probably have concerns about it for 2 years. What you need to think about as a speculator is, what's the long-term alternative? Are First Nations people in the Yukon going to go back to trapping muskrats? What I'm trying to say is that if you think about this event in the context of 5 years or 6 years, which is, in my experience, the way that you have to think about making money from mine development, you have to be willing to view this as an opportunity. So while I don't see this as an event which is engendering panic in the whole junior mining market, my hope is that the panic continues for at least one name in the Yukon that I personally would like to own. I noticed that Brian London is on the call. Brian has been involved in junior markets for almost as long as I have. A panic, a panic is when this stuff sells off across the board by 30%, and we aren't close to there yet.
Okay, yeah, there's various forms of panics, and yeah,
Yep.
I get what you're alluding to. Does seasonality factor into your process in any way? In the junior mining sector, there's some pretty well-known seasonal tendencies, including the tax law season, October, November, and into the final few weeks of the year. There's usually a lift at the end of before Labor Day. Does this factor at all into your thinking?
I have a trading overlay on my portfolio, which is to say, I would suggest that maybe 10 or 15% of my junior portfolio is subject to active trading. Um, but for the most part, no. If things are oversold, the real penny dreadfuls that I would never talk about on your show because too many people would be listening, I might buy during tax loss selling season and then sell into PDAC. But you know what? I do that for amusement. Um, the speculative money that I have made in junior mining has been really in positions. Uh, I've said this fairly frequently in interviews, but I would suggest that 80% of the money that I've made in speculation has come out of positions that have increased 1,000% or 2,000%. Those positions have characteristically been held for 5 or 6 years. And those positions, in almost every case, have exposed me to a 50% share price decline during the period of time when I held the stock. If you if you do what I do, which is invest in anticipation of answering a series of unanswered questions, what you understand is that it takes 12 or 18 months to answer the question. And I need to get 2 or 3 unanswered questions to get a 10 bagger, which is to say, I'm constrained in my positions to those which I am willing to hold for 5 or 6 years to get compounding. That's clearly not a trading strategy. Now, there will be a circumstance where, as an example, not too long ago, 18 months ago, with Equinox Gold as an example, the stock sold off by 50% because of the market's fear that they wouldn't be able to complete their Ontario construction on time, on budget. I found that concern excessive. So in that particular case, I didn't trade it, but I did use a precipitous market decline as a tool to increase my position. But it had less to do with seasonality. I would suggest that your own discipline, which is to say, a discipline involving more technical analysis, would be a discipline that would be better geared to taking advantage of seasonality than mine.
Fair enough. And then before we open up the floor to questions about people's favorite stocks, and if you do have a question for Rick, just go ahead and ask to be a speaker, and I will call on, probably take 4 or 5 questions if people have them, and try to keep it concise, like under a minute. Site visits in junior mining. So I heard that you were on a site visit the last few weeks. How important are site visits for an investor, and what do you learn from a site visit?
Site visits are fairly important for me, and I can afford the time now that I'm retired. When I was in active business, particularly when I was active with Sprott, active in terms of building, as an example, the exchange listed physical products business, I couldn't afford to go on site visits because my time doing other things was more valuable than my time doing site visits. I've also been very lucky in my life, and I would suggest very good too, at hiring surrogates, sending Brent Cook or Justin Tolman or Borden Putnam or somebody else in my stead on a site visit. But I enjoy site visits. uh, the recent one that I just did to Integra Gold really reinforced what a pleasant process it was. It's also extremely useful for someone like myself. As an example, watching the CEO, does this person treat his subordinates with respect? When the CEO is giving the arm waving part of the story, are technical members of his staff, the geologists and the engineers, visibly uncomfortable with his arm waving? In other words, you can tell by their body language whether or not they believe it to be true. I have a better sense of spatial relationships when I see them as opposed to when they're on a map. Standing on a hill and looking down at where the pits are supposed to be, where the conveyors are supposed to be, where the leach pads are supposed to be, where the pregnant pond is, where the waste ponds are, uh, is easier for me still after almost 50 years of doing it if I see it than if it's told to me. But in truth, at my point in time, uh, site visits for me are more of a luxury than anything else because I enjoy doing it. It also gives me uh, the psychological ability, I guess, to stay the trade. For younger people who have done a lot of the work to educate themselves and prepare themselves to be good speculators, site visits are a wonderful place to employ their education and to expand their education. And I think a substantial measure of the success that I've enjoyed in speculation for the last 30 years was a consequence of doing site visits as much as 50 years ago.
Yeah, I completely agree. You can learn a lot on site visits, and the more you go on, it really, adds up, and you're able to actually maybe have some real knowledge and sometimes act like you know what you're talking about from time to time. So before we get into questions, we've got two questions already for you, Rick. I'm going to throw the first two at you, and then I'm going to let everybody else take it from there. First, stocks. I'm just going to throw you a symbol. Give me your thoughts on it. If you have any, obviously you can pass if you want. The first one is RAMP, RAMP.
Do not know it.
Okay. Second one is BIG, BIG on the TSXV.
What's the name? I don't know them by
That's
symbol.
Hercules Silver.
Oh, so I own Hercules. I couldn't resist the photos of the drill core. That may be a mistake. It responded probably too well in the market. I am holding onto the stock myself because the geophysical signature in particular is large enough that if they can repeat the sequence, uh, that high grade sequence, the upside in the stock is stupidly high. Uh, Somebody who owns this stock needs to be able to tolerate easily a 50% decline in the share price without it changing their decision as to what to have for breakfast. So I would define this as high risk, high reward. I have it as a 5. My ranking scale is 1 to 10, 1 being best, 10 being worst. I only have it as a 5 because of the size of the prize. I think the probability here is loss, but there is a possibility of a gain in a dimension which I can't resist.
All right, Alan Berry. You're first up, Alan.
Hey, thanks for letting me speak, and thanks for doing this, you guys. Rick, I noticed that you've really made a push into using social media. You're a pretty sharp guy, and I imagine that's because you're seeing value from it. And I wanted to ask you if that's the case. And by the way, thanks for all your commentary because it's very helpful. And then I had a second question, which is, do you think that more companies should be using these social media tools? And I do see two companies on here that do that quite nicely. One is American Eagle, and the other is Kenorland. I think very highly of both of those companies, and I do appreciate their use of social media. So I kind of packaged a couple questions into one there.
Sprott used social media to build a $30 billion business in exchange traded trusts. Everbank used social media to build a $28 billion deposit base. I would go so far as to say that all of the money that we spent at Sprott on conventional advertising was wasted. Everything that we spent, other than using social media to educate customers, establish credibility through education, and use that credibility to get them as customers, was wasted. Social media works for me two ways, despite the fact that I'm retired, ostensibly. I'm building a for-profit financial education business, and I'm building Battle Bank, which is to say round 2 of Everbank. And social media is a way to lower my customer acquisition cost while at the same time refining my customer base to customers who have a good sense of what I'm doing. In other words, not just get customers, but get good customers. Separately and apart from that, Alan, at 71 years of age, I'm conscious of the fact that I would like to leave the world a better place. And I use social media, I use the credibility I have on social media as a consequence of my skills in investing to propagandize on behalf of libertarian ideas. I have access to a sort of a 250,000 person social media network that comes to me because of their interest in getting richer, that is exposed to a social philosophy which I think has some chance of saving the world. And so there's a bit of a messianic benefit to me for being on social media.
Kaiser Soze, you have a question for Rick? And again, if you guys have a question for Rick, please ask to speak.
Yes, thank you very much for the opportunity. Hi, Rick. It's a pleasure to speak with you. I'm going to be very quickly because I think there is a lot of people who want to talk to you just about core assets. And I know that CEO is a shareholder in the company. Just I wanted to have your opinion on them. They are in BC, in Athens, BC. They are drilling right now, and they found I think they found a porphyry system. I don't know if it's huge or not
Uh,
already.
I'm sorry. The name of the company, I didn't get it.
It's Core
Core
Assets,
Assets Corp.
CC on the
Yeah,
CSE, Core
yeah.
Assets.
I don't know them well enough to comment, so I'll have to pass on that one. I need to say, as a sort of a general comment, that I'm less inclined to British Columbia than most people, with the exception of uh, projects that are in Taltan land. I consider British Columbia to be a much riskier jurisdiction than many of my competitors do. But this isn't a comment on that particular company. I don't know enough about that company to comment.
All right, that's Core Assets. I'm a shareholder of that as well. And American Eagle Gold. Is this Tony? Tony?
Yeah, it's Anthony. How you doing?
Hey.
Hey, Rick. Thanks for joining the call. So I'm Anthony Moore. I run American Eagle Gold. I'm not sure if you've heard of us. I heard your comments about site visits. I just heard your comments about BC projects, which kind of muted my first question. But we're doing a site visit next week on Wednesday, 24 hours from Vancouver and back to Smithers. Someone just dropped out. Rob's going. So there's an open invite. If you'd like to go, I think the best fertilizer is the footsteps of the farmer. So you can
No,
drive a golf cart right onto our property.
I like site visits. Thank you for the opportunity. The
You're
1st and
welcome.
2nd of July, I'll be hosting the Mining Journal Select Conference in London. The 7th through the 11th, I'll be hosting my own conference in Boca Raton, Florida. So you're coming into the 2 busiest weeks of my year.
Have you heard of American Eagle, Rick?
No, sir.
Okay. Thanks, Tony. Big Mike. Big Mike. Go ahead, ask Rick a question.
Hey, Rick. Hey, since you brought up your libertarian interests, I was just wondering what your opinion on Bitcoin is and if you own any. I know it's a little outside the wheelhouse of what Rob probably wants to talk about, but I'm just curious.
Philosophically, I'm all over Bitcoin. The idea that there would be an anonymous means of exchange is attractive to me. I'm a consumer of currencies personally, and the idea that there's a bunch of smart people around the world trying to design products that serve me better, particularly non-governmental, is of interest to me. I traded Bitcoin a little bit, very successfully, but I don't invest in things I don't understand. What that means is that I personally allocate capital aggressively in natural resources businesses, which I understand relative to my competitors, and conventional financial services. I wouldn't consider myself to be competent in crypto or even really in the technological applications of the distributed ledger, although I've invested by now a fair bit of money in uh, technological applications around the digitization of gold and commodities, respectively. With specific regards to Bitcoin, from a philosophical point of view, I'm on it like white on rice. From an investment point of view, I'm not there because I'm not competitive in terms of knowledge.
Okay, Dan Kozel, question for Rick.
Yeah, hey Rick, good to hear from you. Wanted to just get some commentary on what your thoughts were on Luca mining. I understand they had a pretty exceptional quarter. They're trying to pay down some debt. And then I think another company that's tied to it is Empress Royalties. So just want to get some commentary on that and your thoughts. Thanks, man.
So I'm a large shareholder of Empress Royalty. I believe that they have durable competitive advantage in the royalty space. as a consequence of their association with Endeavor Mine Finance. They have better access to product than some of their other small royalty competitors. I have a small position in Luca Mining. I really, really, really like the people. I would have a bigger holding in Luca Mining, except for the fact that I have a prejudice against small mines. It seems to me everything that can go wrong with a small mine can go wrong with a big mine, but a small mine can only ever make you small money. My hope is that the exploration upside at Campo Morado is such that once they begin generating free cash from it, that they will try to make it bigger. I have Luca again as a 5, and I own it more because of the people than the projects. What you suggest in terms of the free cash generated in the quarter and the implementation around returning these small mines to production is completely accurate. They've done a stellar job. But again, I'm attracted to the people, not the projects.
All right, thanks for that question. And one more person. Is it Silver Oil Carrot? Go ahead and ask him to make your question.
Yeah, hi. I'd like to follow up on that inquiry coming from Robert initially, uh, in the early part of the interview regarding Hercules. I'm not exactly sure just how closely you're following their new drink campaign, but I'd like to ask, in a kind of broader context, what does faulting entail when exploring for copper? Because Hercules has encountered some faulting on their property, and I'd like to know your kind of opinion on what that might entail. Thanks.
That's a great question, and that would take more time than we have. Drilling off porphyries is not for mortals. It is very, very, very expensive. Had I not seen the initial drill hole, in other words, had I not seen polyphase, very high grade mineralization, I wouldn't be an owner of Hercules. Um, there are going to have to be an awful lot of drill holes put into this before somebody understands the scope of the system. And holders of Hercules, myself included, are absolutely positively going to be exposed to an awful lot of disappointment. If you don't have the courage of your convictions, or if you aren't using money that you couldn't afford to lose 85% of without changing your decision as to what to have for breakfast, you shouldn't own Hercules. I, in 50 years of speculating, frankly, have made more wrong decisions than right decisions. Mercifully for me, my wrong decisions have cost me 25 or 30 or 35%, while my right decisions have made me 1,500%. The arithmetic around that is pretty good if you can afford psychologically and financially the wrong decisions. Um, I hope that that framework, intellectual framework, tells you what you have to, how you have to think in order to be a Hercules holder.
Mhm. Yeah, that's very well said, Rick. And his question is quite astute, actually. It shows he's clearly following it. And the way they figure out the faulting is by drilling. So they need to drill in all the different areas to really get a full grasp on how the ore body has shifted. It takes time, it takes money. And porphyries are big bodies of ore that do require a lot of drilling to fully understand. Rick, let me throw a few more at you, and then I want to talk about the rule symposium. NXE, NextGen. So obviously you know that company, but I got a little bit more detailed questions for you.
Shoot.
Who's building the mine? Is Lee going to take it all the way, or is it a consortium that's going to build this? And what do you think, their strategies at this point? Are they slow playing the build a little bit, the permitting, or are they going full speed?
I think that Lee is attempting to go full speed. I think that what he thinks is that you proceed with construction, you proceed with adding value, you proceed with the detailed permitting, and you de risk it. there's an old joke in the mining business that if you build it to keep it, you get to sell it. And if you build it to sell it, you have to keep it. This is a generational asset. And I suspect that 5 years ago, Lee understood that the nature of the uranium market was such that even with a world-class deposit, he couldn't build it. The nature of the uranium business has changed profoundly in that, unlike any other commodity in the world, producers can enter into contractual arrangements over the long term, and they can lock in volumes and prices. In other words, they have price certainty for as much as 20 years, which you don't have in any other commodity. The impact of that is that conceivably, Courier on his own or in conjunction with other parties could enter into rather expensive fixed price contracts for the mine and the infrastructure, while simultaneously entering into term contracts for the offtake, provided that the term contracts were with investment grade counterparties, and literally take that to the bank. In other words, the balance sheet of Duke Power or Tokyo Electric Power or the Southern companies begins in the project finance world to substitute for the balance sheet of NextGen. Were you attempting to build a copper mine with the same upfront capital cost that you are going to experience at NextGen in the uranium business as a junior company, you couldn't do it because you didn't have the on-balance sheet capability and because the bank didn't have the certainty with regards to price and volume. Uniquely in the uranium business, it's conceivable that you could do this. And I think, well, I don't think, I know from conversations with Lee that he's cognizant of that. I would be happier if NextGen were either taken over or if they would enter in to some type of joint venture with an entity that had more experience in mine building and the ability to do some of it on balance sheet. But I think that the idea that they could build it themselves is not as far-fetched in the uranium business as it would be in any other commodity-centric business.
Okay, fair enough. RDG on the TS6 This is Chad Peters. I know you're a shareholder.
That's Ridgeline. I'm
That's
not good at symbols.
okay.
That's Ridgeline.
That is Ridgeline.
Yeah, I am a shareholder. I'm attracted to the people. I'm attracted to their at least partial adherence to the prospect generation business model. I like the fact that you leave the financial heavy lifting to other people, and that at the company level, like Kennerland, which I think is also on the call, that your real assets, you come to understand, are the intellectual capital of the management teams involved. I like, too, the fact that with prospect generators, third parties, interested third parties, do your due diligence. Were I to send Brent Cook or somebody else to look at Ridgeline's projects, they would send me a bill. When a third party looks at those projects, they write a check, which is the most sincere form of due diligence. So the idea at Ridgeline that major mining companies will do my due diligence for me and express their preference rather than by sending me a bill, spending money in the ground, that's the most sincere form of due diligence. So I like the whole prospect generator space, including the two prospect generators whom I know to be on this call.
Okay, very good. I'm going to throw one more at you, and then we'll talk about, we'll suppose, Banyan Gold. We kind of touched on it a bit earlier, but it's kind of interesting and in your wheelhouse because it just closed a $14 million financing, and they lost $30 million cap in 3 days following closing the financing.
I like her a lot. I am less enamored with the project. I am less enamored with sole risk exploration. I prefer using other people's money, not my money. And I don't like what I consider to be small to mid-sized projects, pardon me. So I don't own that stock to the extent that it fell substantially in price, to the extent that the market capitalization was below what I considered to be the net present value. I might look at it, but I have a functional screen in that I have to see my way very clearly in projects to in situ value of recoverable reserves and resources in excess of 1 million ounces of gold equivalent. That's sort of my bottom cutoff, and I would much prefer $5 billion in equivalent. If I'm going to take the big risks associated with even advanced exploration, I want access to big rewards, not marginal rewards. And I'm not a trader, so I don't own Banyan, despite.
Well, you said you are a little bit of a trader. You said you dabble a little
Yeah, okay, but yeah.
bit. All right. Thank you, Rick. That was great. We covered a lot of ground there. Final topic, the Rule Symposium. So today is June 27th. So this is 10 days away. It's in my backyard. Great five-star hotel. I don't know how you got those room prices because the Boca Resort, certain months of the year, it's $1,000 a night. It's $1,100 a night. It's incredible five-star resort. Tell us about this conference and why people should attend.
Oh, I'm delighted to do so in front of my competitor, Brian London, who runs the second best natural resource conference on the planet, the first being mine. Um, Sorry for that little dig. He and I enjoy each other. He'll be at mine, I'll be at his. What sets mine apart? Well, first of all, like his, it's gone on for more than 2 decades, which is to say it's stood the test of time. It stood the test of time because we do a great job, first of all, with the big thinkers, the big picture people, the Jim Rickards, the Daniela DiMartino Booths, the Nomi Prins, Grant Williams, people who tell you about the world the way it is, not the way CBC or ABC wishes it was. We have wonderful analysts, people who have made money in natural resource-based businesses for 30 years. You know, not third-rate hacks from investment banks that failed at technology, failed at consumer durables, things like that, but rather people who have made money where the rubber meets the road. The third thing that we have, which is fantastic, is the living legends. We have people who have built multi-billion-dollar mining companies from scratch, the Robert Friedlands of the world, the Ross Beatties of the world, the Bob Quartermains of the world. And they tell you how they did it. They tell you the mistakes they made. They tell you the lessons that they learned and how those lessons are appropriate to managing your own portfolio. Or, in layman's terms, what it takes to build a $5 million company into a $5 billion company. Every exhibitor at my conference, every single public company exhibitor has been vetted, meaning that if the conference sponsors don't own shares in the company, they can't exhibit on our floor. We turn down more exhibitors every year than we accept. At most conferences on the planet, the qualification to be an exhibitor is a pulse and a check that cashes in reverse order of importance. There's no guarantee that because I own a stock, it goes up, but there is a guarantee that the process is honest. Finally, whether you attend the conference live or in person, we tape every single proceeding, including the breakout sessions, and you will have access to those tapes for the balance of 2024, and you'll need them because we give you 60 hours of programming over 4 days, more than you could possibly absorb. You will have to play the tapes to get full value several times. The conjunction of all of these attributes means that I can say to your listeners, whether you attend live or by now more probably via live stream, we have a gold-plated money-back guarantee. If you think for any reason at all that your attendance at the conference, either live or live stream, didn't generate enough benefit to justify the tuition that I charged you, I will refund your tuition. So the financial risk was all mine. Now, last year, out of well over 1,000 live stream viewers, I had to refund 3 tuitions. 2 of the 3 people requesting refunds said that the information was over their head. In other words, I gave them too much for their money. But I'm okay with that. What I want to do is encourage people to come. And if for some reason you feel that I didn't deliver what I said I'd deliver, there is an absolute gold-plated money-back guarantee, which I don't see other places.
Perfect. Rick, thank you so much for your time this morning. I'll see you in South Florida in 10 days. I look forward to it.
Please come up and say hi. I look forward to that.
I will.
Fantastic.
Yeah, you can't miss me, Rick. I'll see you
Great.
next week.
Thank
Cheers.
you. And thanks, everyone.